Welcome back, everyone. We now have the pleasure to welcome Agillic, a SaaS company providing an omnichannel marketing automation platform. And today, Agillic is represented by the company's CEO, Emma Gøsøy, and also CFO, Claus Boysen. So first of all, a warm welcome to you. Before I will hand over the word to you, I will just remind the audience that, as always, you can ask your questions in the comment box below. And with that, I will hand over the word to you, Emma and Claus.
Thank you very much, Kasper, and thank you very much for the invitation. Let's just jump in just into the story, because I really like to spare some time for questions and discussions as much as possible. So let's first and foremost, let's start with what we do. Agillic is a technology company. We operate within the marketing technology space, and what we call ourselves is an omnichannel marketing automation platform. The platform has the same name, and what we do is specifically focusing on utilization of first-party data from our clients, various activities regarding to their customers, combine it with the content that they would like to communicate with their customer base, and do this across all channels via no agnostic thinking, and making sure that everybody gets the messages that they are interested to do that. So it's right time, right message via the right channel. Now, why is this important? Because it brings a kind of a customer experience where this directly connects with various different type of business results. Is higher conversion, increased customer lifetime value, elimination of churn. These are all the kind of business elements that are highly relevant. So we like to see ourselves as one of an important business results oriented company. If I give a couple of highlights on the big picture, these are results that we have shared on our Q3 numbers. Our overall total ARR is around 70 million. We have concluded Q3 with a minus 300,000 on our EBITDA, which we are hoping to complete the year, third time in a row. This will be the third year in a row we'll be closing with a positive EBITDA. We are 47 employees. If you compare it to last year, same time, it's almost the same. Since 2018, we have been on the First North Nasdaq, and of that geographies that we are looking at, we have 111 clients from multiple markets. And what I like to say that we're 100% technology company. We do not do any professional services. So what you're seeing is our numbers. They're all directed to our SaaS business. Going back one step to how we are doing what we are doing is that we like to call ourselves that we are delivering personalized communication to millions, which is basically bringing the data and content and messaging to the end user. And the way that we do that is utilizing data, the data that the first-party data that our clients are collecting via various different activities that they run their business with. This could be transactional data, e-commerce data. This could be their behavioral data of their customers, or any other activities that they have been collecting data from. Now, this is all connected via multiple other technologies that we integrate into. So we are not one for all, but we are a best of breed in marketing automation, but we work with the data that is collected within the company and activate this data to its maximum. Now, why is this important? It's terribly important, and it's highly relevant, because in the days that we are living, the third-party data, the new regulations around everything regarding protection of the customer data brings the first-party data as one of the most important elements and most valuable assets of any company. Now, any company, because if you look at the client base that we are operating, it's quite broad. We are working with multiple different industries, and what is unique about most of these ones is that they're all working with first-party data, and they are building their businesses based on first-party data utilization. Now, we take one step forward, working with these kind of activities, working with first-party data. What we define ourselves as Agillic is becoming more and more of a growth engine for the clients that we're working with. These are a couple of examples. There are multiple videos that we're putting about our clients and their business results on our website. I would highly recommend to watch some of these. It's all about uniting how to get the most out of first-party data and increase the utilization of the assets within the company to create business results. As I said, these business results could be improved sales, it could be elimination of churn, it could be a subscription increase across the board. Now, this is happening because there's also another side of the medallion. On the other side of the medallion, which is basically the customers, they are demanding that kind of messaging being personalized. They're giving their data. In return, they want relevance, they want timely messaging, and that relationship is becoming stronger and stronger. And those who are not following and not uniting that, they're actually going to be the losers in that space. Now, what does that mean? Now, if you look at, we have done a research previously this year, and this is done across Europe, and we looked at what are the main elements of omnichannel marketing automation and the relationship between the customer and the brands that they're working with. And what we have seen is more and more the companies are expecting more operational success, more results orientation, return investment, faster time to value, which is basically faster time to get return investment and value out of these activities. And we have also worked with one of the thought leaders that we are, Franz Riviera. He's from Benelux, and he's working very much, he's one of the leading thought leaders in Europe at the moment regarding marketing technology, MarTech in general. He has done a research, and it is obvious that there's an increasing interest and still continuing investment to the MarTech space, to the technology space altogether. Besides, we've also looked at Gartner. We have also looked at their way of defining how they see the future in the coming year, because we are now once again we are operating within another year of business not usual, and that means that we are operating together with our clients very closely, how they can get the most out of the investment that they're putting together. But what we have realized that digital investments are continuously increasing. I mean, one of the reasons that, for example, Gartner has done the research with the IT departments, and they've seen that the investments are going forward, and the part that they're investing most is the software part, because everybody knows that the efficiency, the effectiveness that you expect to deliver will be mostly driven by software, which is basically the technology investments. So this is just a big picture on how we are seeing it, how we are seeing the space and the movement moving into the 2023. And just before I put the word to on the financial side with Klaus, I just want to mention that we started the year with a specific guidance of how we are seeing it. There was a growth across the board, and then later on we have uplifted our guidance twice, and in multiple areas. We see the year quite a successful year that we are completing, and if you live up to our guidance, which we will be completing the year in a couple of weeks, and I think will be a very strong base for another year ahead. Do you want to take over there?
Thank you. So when we uplifted our last guidance in October, we have guided on a total revenue of 61 to 65 million per year end, which is an uplift of 23% year over year. We have also increased our total ARR in the range of 68 to 76 million, which is again an uplift since the last two guidance we had previous. If we look at our total revenue, it is represented at Q3 of 46.6 million, combined by our subscription and transactions, which is a growth in both parts, but mainly in transactions in 2022. And furthermore, we started in the summer of 2022 to also report a little bit on our what we call committed future revenue. So our general contracts are based on a yearly subscription fee paid upfront, which means that when we say committed revenue, it is committed revenue to what is coming in both Q4 and 2023. And as long as we see an increase, it's a positive signal that we increase our value of our contracts or the number of contracts that we have. If we look a little bit into the EBITDA, We started the year with a minus of 2.6, but as you can see on the graph, we are moving towards a 0 in the half year, and then 1.7 in the first quarter of 2022, a 0 in Q3, and a plus in Q4 of 1.4, and aiming to get an EBITDA at year end between 0 and 3 million. On the total ARR, we have at Q3 reported 69.9 million Danish kroner, which is a combination again of our subscription and the transactions, which is an annual or year-on-year growth of 36%. Then if we go to some key SaaS highlights, our number of clients at end Q3 was 111, and they have an average value per contract of approximately 600,000. So even with the growth in our client base, we maintain the fair and good solid average growth of our contract on 600,000. In 2021, actually back in 2020, we started focusing on extending our international footprint. And in 2022, we have up till Q3 managed to get 44% of our clients win are coming from international markets, and the value of those contracts are also represented as 46% of our total new contracts in 2022. If we go to the net retention rate, remains positive. We want it to be above 100, and per Q3 it was 102, and providing a customer acquisition cost of only 160,000 Danish kroner. It's not a necessarily target or necessary target to get a very, very low customer acquisition cost. However, it is a focus on our general cost as well as what we spend our sales and marketing cost on, which has provided us a lower number in 2022. And that is giving a month to recover on CAC for 4 months. A little bit on the cash flow. We started the year of 2022 with 20.6 million, and over the first half year, we have spent almost 7 million at investments in our platform, and a few 1.6 million on the finance, and then cash flow from operations of a plus 500,000. Q3 is historically a period of time where the cash flow from operations is negative due to the number of signed contracts and number of inflow of cash, while we maintained our investments at the same level. And on the cash from finance side, we repaid 2 loans in July, which left us to minus 2.5 million in cash from financing and a cash at Q3 end of 1.9 million. What we expect from the full year 2022 is that we will have a full year cash flow from operation is positive. We will maintain our investment level, and the cash flow from finances will be reduced compared to Q3, as that was impacted by the 2 repayments of the loans in order to secure less interest in the future. If we then look at our latest guidance, we have talked a little bit about it. We are at 69.9 million in total ARR per Q3, which is in the range of our total guidance for the full year. Our transactions may fluctuate quarter per quarter, so that's why we have maintained at the 14th of October those guidance so far. And if we look at our strategic goals, we will aim for a double-digit growth in our ARR from subscription, a positive EBITDA, and a positive cash flow from operations.
Yeah, I just want to come up with I think it's quite important to mention, as this is how we are This is what we have delivered in Q3. This is how we see the end of the year and how we look at the future. And I think it is quite important to mention that we are quite proud that we are delivering a profitable growth. And this is a 36% ARR growth is in the level that we were expecting to grow for this year. Still, I keep it always it's a healthy growth. And if you look at it, the future, we try to define a couple of the elements that are why it is the right the base for Agillic growth is that our strategy, the growth strategy, is absolutely intact, and this is what we have been following for the last 3 years. We are expanding our market presence in multiple different geographies, and we are doing it in the same way, in the same scalable way, in the way that it is bringing us the business, which is the partner-driven acceleration. We are looking into our customer success and optimizing it into this maximum. Now, why is this important? It's because net retention rate, which is all driven by our customer success programs that we are running, is still one of our key North Star metrics, because retaining our clients, eliminating churn, eliminating downgrade is one of the key parameters of our success. Now, I talked about market, and I think it was quite important to mention that the digitalization, the digital transformation, and customer centricity, and focusing on your first-party data, which is basically your most valuable data, is your first-party data, retaining your customers, still the number one priority across the board, especially into the new year, where it's really costly to gain new ones, but activating the existing ones is quite an important part, which we are focusing a lot of. And I mentioned also the IT investments, software, the way the market is seeing the software investments as one of the other positive areas. In regards to the software perspective, I also would like to mention that I've spoken to many of the CEOs, and what I've realized that there is a common theme going on across the board. And the theme is basically, they're all running this thing. What do we want to keep? What do we want to expand? And what do we want to cut? And this is the kind of a theory, the process they're running one by one right now for the next year's budgets and investments. And we see that multiple times that Agillic is being seen as we need to keep it. And if possible, we want to expand it, which is basically new channel executions, new activation of new growing database, because that's a business delivering software that they're working with. So this is one of the points. Our platform is ready for the growth, as I mentioned earlier, that we are now looking to new markets. And as we look into the new markets, we don't have to do anything specific for our platform. Platform is ready. We can expand to the next ones as we go through. And it is also important to mention that our ecosystem of different partners that we work with, they are also international, and we are doing this collectively. So as a group of companies who are focused on creating value for the customers that we are getting engaged with. And our organization is fully in place at the moment. We have all the right elements, from thought leadership to center of excellence to finance to management altogether. We're in the right place for the right growth. So this is what we wanted to share with you today, and we would love to have your questions, if there are any.
Perfect. Thank you very much. There's a lot of questions here. So, but let me start first. Emma, you touched upon it, but if we start with the Forrester study, you mentioned that approximately 70% of the key decision makers are expected to increase the investments in omnichannel marketing automation technology. And taking the current macroeconomic uncertainty into account and these things going on right now, do you still expect this, or do you see this number as the same or the same level as this study? And also in terms of the resilience of your platform, how sticky do you see the platform of Agillic?
There are two different questions, so I'll just take one by one. Number one, the study still, I think, is very valid, because there's an increasing focus on software investments. But as I said before, the software investments are qualified in 3 different categories that now: keep, expand, or cut. Now, how do they define this? It's basically return investment. And this is the second part of your question. How do we see our stickiness? Is basically the way that we deliver the results in that short period of time that we actually start the engagement. For our existing clients, that's what I call, this is still a North Star metric for us, that, customer retention, this is our focus. But that is basically the business results that we have been delivering for them is the reason that we are with them in the next years. Now, for the new prospects, as we bring the return on investment in such quick phase, they can actually see the results that they are generating, and that's why we think that our growth rate will continue.
Yeah, cool, perfect. All right, so you also mentioned the strategic goals, and I think it was about double-digit AR growth rate going into 2023, and some positive EBITDA and positive cash flow from operations. But there's a question out here as asking whether you are giving a more detailed guidance for 2023 and when.
So that decision is, of course, up to the board to decide, and those discussions are internally made there before we decide whether to give guidance. We have done that in previous years. We have seen some companies that have chosen not to give guidance because of the uncertainties, but we will revert on that when the board has made its decision.
Mm-hmm.
Okay, perfect. Moving on to
just an add-on. If I would like to add something in that one. I was speaking to some of the investors recently over a dinner, and the very interesting thing is they were actually telling me that they were quite happy to work with us because we have been extremely transparent for year over year on the number of metrics, financial metrics that we have been actually guiding on the market, and they could actually, without changing any of these terminologies, and they were saying that keep doing this. This is perfect transparency.
Yeah, agree on that, and maybe also on that. Do you expect them to split up the net retention rate, so both on upselling and on the churn rate? Do you expect that going forward in terms of reporting?
Then again, that goes back to Klaus's point that this decision has to be driven by the board of directors, but we will continue reporting the metrics as we are reporting on the SaaS side.
Perfect. And I ask here about upselling, but there's a question out here: how much potential do you have to grow your existing client base? So you have about 600,000 each client, right? In the value of them, do you expect this number to grow, or do you see some big potential in your current customers? That's the questions I can say for that.
I would say several things. Yes. First of all, backing up the things that Emma mentioned on what do our clients use our platform for. So once they sign up, they will often add new channels. They will often have a success rate with their number of recipients that they're entitled to communicate with, meaning that they will keep their existing base and actually add in new users, which is a solid sort of platform to grow, and thereby also grow our potential with our customers. That's on the subscription part. On the transaction part, what we have aimed for in 2022 is also seeing that we have talked to our customers, we have let some of our customers meet other customers to tell about our communication channels with emails and SMSs, to say, what can you utilize that for? How do you secure that it's a good retention rate you can keep on your clients without spamming them and so forth? And that has also led to the growth and thereby also some sort of stickiness to our platform. So yes, there are huge potentials. Transactions, of course, a little bit more impacted by what happens in the market, in which industries, how does it grow, does retail grow, does travel grow, and so forth. So we are dependent on the transaction part, how the market also reacts.
Yeah, perfect. And you also a SaaS company that has delivered a positive EBITDA over the past years, but have you done more to focus on your cost side recently, such as sales and marketing? There's a question out here, and can you counter this with higher efficiency?
Let's put it first and foremost that this cost focus that most of the companies are talking a lot about this. This is something that we have started actually back in 2020 when I joined the company in March 2020. This has been one of my number one priority is to turn the company into a profit-making, a healthy structure, keeping the growth on the side. And this is what we've been doing so far. As I mentioned earlier, if you look at a company as such, the largest cost that we have is our number of employees. This is quite usual for these technology companies. When you look at our number of employees that we have right now compared to last year, we have the same number, 47. Now, if you look at our size, and we are growing 36% on our AAR, keeping the same number of employees. Now, the cost might change because of the multiple reasons, but the number of headcount. Now, why am I mentioning this? Is because we keep agility, we keep automatization of our own processes, and increasing efficiency via these activities has been our strategy for multiple years. So yes, we will continue doing this in the new year. Yes, we will invest on not only headcount, on technology side, sales side, more on the marketing side, but these are all combined activities for new market approaches and how to get the most out of it. So yes, the answer to your last question is yes.
Perfect. Let that be the final remarks. Emma and Klaus, thank you very much for presenting here today, and very valuable insights, and also thank you for answering all the questions.
Thank
you
you
very much. Thank you.